Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun reacting to other people's ideas. So in this video, I wanted to go over some thoughts that Michael Burry recently shared with us, kind of reflecting on his thoughts on GameStop back in 2019, leading through 2020 and 2021 and revisiting those thoughts. And then also, I wanted to go over some thoughts from Jordy Visser that came out a few weeks ago. I did do a short on his video, and I kind of wanted to react to some more of that content. But here, what we can see, this is Michael Burry on X. He posted this on November 27th, and he said, "It was complicated with GameStop. In some ways, I wasn't really done in the fourth quarter of 2019. And so in just a second, I will look over at the GameStop chart so we can see where it was at in the fourth quarter of 2019, compare that to now. But I also wanted to just briefly go over these screenshots that he posted. This was an exchange that he had with Ryan Cohen, who is, of course, the CEO of GameStop now, and also the founder and former CEO of Chewy.com. And so this was an exchange that took place on September 24th, 2021, where Ryan Cohen responds to Michael Burry and really, just thanking him for sharing some of his ideas and that they'd like to get on a call together. And so that was 2021, after the big moves that we saw that year. And, following that, we did get some big moves in 2024. Was that the REQUEL? I think, actually, that it was not, and that we might be seeing that in 2026, and given this timeline, 2019 to 2021, maybe 2027. So good to be patient with that. But then going on to his next screenshot, this was an email that he sent out to his firm, Scion Asset Management. And this was, I guess, dated August 2019. So this email over here was September 2021. So yeah, this is going back in time a little bit. And so this is him telling, members of the board that they own 3 million shares, or about 3.3% of GameStop common stock. And again, this was in 2019. In August, that will become important when we do look over at the chart in a minute. And basically what he's saying here is that he feels there's been a lot of mismanagement with the company. And one of the quotes, and this might relate to some other stocks that we're fond of, and I think that the moves that we're talking about here with GameStop could be relating to other companies, stocks, and that's either going to be related to short positions getting squeezed or due to leverage due to options. Jordy Visser will talk about that in a little bit. But I just wanted to bring up this point here where he says, GameStop does not need ghosts of the past protecting a legacy of poor capital allocation and thin oversight at this point in time. And so that was, following this statement here saying that Scion calls on chairman of the board, Daniel A. DeMatteo, to request the resignation of the 4 longtime board members listed below. And so basically these board members were getting paid salaries just for sitting on the board as the company diminishes. And, GameStop has cleaned house. Virtually all, I believe all, of the board of GameStop now takes no compensation, and they've really changed their business around. They've done a 180. And we haven't really seen that with some other stocks where CEOs, board members do get heavily compensated. One of those companies, I won't mention the name because it's not, what this video is about, but I do cover that stock a lot. You guys know what I'm talking about. There is a vote coming up in December, and part of that vote was for board members, executives, and their compensation. And so some companies turned around like GameStop, others have not. And so any company does not need ghosts of the past draining the capital of the company when those members could just be invested in the company and they would then be compensated by the stock, the company performing well. In GameStop, we have seen that, but maybe we're going to be seeing some more of it in the coming months to years. And so this is the final screenshot that Michael Burry posted. This was again to his firm, Scion. And up here it says that GameStop reorients board largely along the lines of my suggestion in August. And so this is actually, what Ryan Cohen was referring to, kind of thanking him for his sharing his ideas. And this email was dated March of 2020. And so he says that, he just spoke with the CEO and CFO, and apparently they did do this in response to my requests. They wanted to make sure I knew that I was heard. Pretty crazy versus what it took to get any changes during the Scion Capital days. So I'm not really sure what he's talking about with that. I imagine that is referring to the Big Short days and stuff like that, but I'm not really sure. And so, yeah, this is just that 3 of the board members' resignations that he's requested. They were resigning. And so, yeah, there was some success there. But, I don't really want to be spending too much more time on this, but I do just want to go back to one of these screenshots, and that is dated August of 2019. And I want to consider that when looking at the chart. What we can see is this is August of 2019. So just a couple weeks. This is the weekly chart. Couple weeks before Michael Burry sent out the email on the 26th. We have the lows here on the week of the 12th of August 2019. It did put in a lower low following that in March of 2020, but he was saying that, it was at all-time lows. And shortly after that, looking at this on the weekly time frame, again, we did see this massive move to the upside. So just taking it from the lows of August 2019, going up to the highs there, that's about, nearly a 10,000% move to the upside. Actually, more than that if we do take that wick all the way to the upside, but short-lived there. We did have a retest over here. But yeah, thousands of percent to the upside. And I also should note this is on the log scale. That might be why it looks a little scrunched. And so with that being said, I think it's very interesting if, like Michael Burry said, in some ways, I wasn't really done in the fourth quarter of 2019. So if we do go over the chart, if, he's suggesting that there might be a requel, and that was dating back to August of 2019, that being in, or, just about the beginning of the fourth quarter, the low over here, that was in the first quarter of 2020. So if we go back to here and look at this move, I'm just going to kind of copy that bar pattern here. And we can see that. I'm just going to take it to the week after the big move. We got this nice big candle pattern here. And so I'm just going to move that over here to suggest where the stock price could be going. But I'm actually going to shrink it a little bit so we can kind of have this in, a little bit more, the same kind of range that we're seeing over here. And so let's say that bottom is the bottom that we just recently saw with GameStop. And I should note that GameStop did close the week at a price of $22.53. That is the week ending on Black Friday, the day after American Thanksgiving. If you don't celebrate, great time. Family, friends, food. You guys should do it. But closed $22.53 for the week. Over the course of the week, it was up nearly 12%, starting to get a little bit of a bounce. But if we do get that bar pattern to copy, if it does replicate, which, I don't necessarily think it will, that would be suggesting price could be going up to $86 a share. I think that we could also, maybe extrapolate that it could be getting back to these, prior all-time highs in the triple digits. But yeah, it's just, an approximate bar pattern. I think if we do take something away from that, time frame is something we could take away from that. So if we're considering this the end of November, moves up here would be April, the end of April, 2027, not 2026. So this can take a lot of time. So I'm not saying this is going to be happening tomorrow, but it could be happening in 2026. Maybe this could be scrunched a little bit over here. And so I do think that's important to note. And also, since this is on the log scale, just to put it into perspective, I'll put this on the linear. And so we could see that. But if he's talking about feelings like over here, and this is what I'm getting based on that drawing, and actually maybe, I don't do bar patterns too often. Maybe I want to redraw that, and we could do it from over here. And there, it kind of looks flat. Maybe this is a better way to do it. I'm not really sure. Just kind of experimenting with this August and then going up to, I'll do it the week after that big move. Yeah, so I think this is a little bit more exciting, and we can see I don't even need to adjust the axis there. But still, time frame, that's going to be 2027. But maybe we're going to be going higher than we went before. And that will be suggesting a price of, like 140, to, 1.25 years from now, 1.5 years from now. So that's pretty exciting. So did want to put that out there. And also then to just switch back to the log scale, we can see some of this stuff a little bit better. Did want to point out that Roaring Kitty's average is over here at 2341, and that was his last YOLO update from June 13th of 2024. Yeah, he hasn't really updated since then. And also just to think about, where we are without any drawings up there, and just thinking about, this again on the weekly. Look at that beautiful green weekly candle that we had for the short holiday week that included Thanksgiving and Black Friday. So yeah, looks really nice. Maybe we could be seeing some very big moves to the upside. And with that being said, I wanted to talk a little bit about and react to one of Jordy Visser's videos. You can see his YouTube channel over here at Jordy Visser Labs. And I was introduced to him and his channel via chats that he has every Saturday with Anthony Pompliano. So you can follow both of them on either YouTube and or X. I will pull up Jordy Visser's information over here. So yeah, I think that he offers some great perspective. And so for him and Anthony Pompliano, they chat every Saturday, but they're not doing it this week because of the holiday. So that's kind of why I wanted to do this reaction video. But he does put out weekly videos on Sundays. Not sure if he'll have one coming out tomorrow, but you should definitely make sure you subscribe to his channel so you can get those updates. And, his theme is empowering seasoned professionals to navigate the future of finance, technology, and AI. And so I think that watching his content is a really good way to get big picture perspective on what's going on in the market leading into 2026. And so I have been watching his content for, about the past month. I really do enjoy his chats with Anthony Pompliano. I think that's a little bit easier to digest. But if you do really want the deep dive summaries, the stuff that he goes over here, I would encourage you follow him. And so I'm going to dive into this video. I'm going to include a link to it as well as to his channel, Anthony Pompliano's channel, and the post from Michael Burry in the description of this video and the pinned comment. So make sure you check all of that stuff out. But I'm going to go over this video, which I actually did feature in a little reaction remix short that I did over here. And that kind of inspired me to want to do this video along with Michael Burry's post. So you can check out that short, but I am going to be reacting to that video over here. And rather than, watching all of his content, this full video to take notes of when he does mention GameStop, I actually used YouTube's Gemini AI assistant, which you can do in any video by clicking the ask button here, ask about this video. And so I asked, does he mention GameStop in this video? And you can see that the very quick response was yes. The speaker mentions GameStop multiple times in the video. And so we see some timestamps there. And so we can get, a quick summary of what he, mentioned with GameStop. And so basically from about timestamp 10 minutes to about 17 minutes, so about 7 minutes there, he's talking about GameStop in and out. So I am just going to fast forward to the 10-minute timestamp. And actually, let's see, over here, we can just scroll to around 10 minutes. And we can listen to what Jordy has to say in relation to GameStop. And I will react to it as we watch. And so, yep, 10:01. Let's see what he has to say.
Go through is how retail traders are buying massive amounts of calls. They are, I will go through some of the numbers and make sure that
and
you
that
see
leads
them.
to
But
gamma
this is becoming
squeezes,
something really important.
gamma
And this
loop.
is not something new. This has been a trend that's been in place. So I believe next year we will see another one of these the GameStop situations, but at a much bigger level.
And so that's one of the ways that these things happen is because whether it's retail or larger players, they buy a lot of call options. Roaring Kitty is one of those. And when price goes up higher than the strike of those call options, which effectively gives you leverage to get exposure to shares in increments of 100 at a lower cost. When price goes above that strike, you basically have the option to exercise them at the strike, which is lower than the price. And then market makers have to have enough shares to cover those calls if they are exercised. And that then creates a gamma loop, gamma ramp, or gamma squeeze. And that's kind of what we saw in 2021 as well, I believe, in 2024. But I'll let Jordy continue.
I believe it has started already. I've showed you guys the quant
Time
unwind
to
type
accumulate,
situation where
basically.
the most shorted positions have gone higher for Goldman Sachs at an index level, and how that has gone up higher than the crowded longs.
And so that's like saying, I believe that's like saying that short squeezes, that positions that are for the most part long, they underperform positions that are more short because those shorts then have to cover as price goes up, and then it just goes up. It squeezes up, very volatile.
I think you're going to see a lot of that in the coming year. I think we are in the
2026.
midst of something which is going to remind people what a bubble actually is. People have called this a bubble. This is not a bubble.
And so what he's meaning in regards to that is, when thinking about AI and this AI bubble, if it is a bubble, it takes a while for bubbles to pop. And with any of this growth that we're seeing in AI, I just gave an example of using AI here to make this video a little bit more efficiently. And, so there's going to be utility with that AI. There's also going to be some duds, there's going to be some pets.com and stuff like that. But we're not there yet. And we need to see this growth first. It's not a bubble yet. It needs to get to the point of being able to burst. And that's what he's talking about. We're not there yet. So there's still a lot more growth in the years ahead. So he's very bullish AI, but that's also going to relate to these other stocks that are over leveraged long via these calls. And then when the over levered shorts start to cover, things start to squeeze. And that could be associated with, this not yet ready to pop bubble continuing to expand. It's going to get a lot bigger. So it's very good. It's a very good time to be long in the market, pretty much, in any of the market caps, whether it's small or, meme stocks, AI, whatever, things are going to go a lot higher.
Bubble is when the short side of this stuff, where retail has the ability of pressing it, and they're buying massive amounts of call options. And then as these things break through it, you get a gamma squeeze. I think this is going to happen in Bitcoin. I think this is going to happen in so many areas of the market, and I'm going to go through the reason why, because this is a structural shift.
So it's not just
GameStop.
GameStop.
These guys covered.
It's not just Bitcoin. It's across the market.
That is expected, like last week. So China, U.S., Mag 7, Fed, everything went good. Vol gets crushed. The market kind of consolidates and goes back down. And it becomes a sell the news event. You either get a sell the news event, or you get
we kind of saw that with Bitcoin recently.
Squeezes. So when Caterpillar can go up 12% in a day, when Oracle can go up 30% in a day, I could go through the list.
GameStop just went up 12% in a week.
There are so many names that are just gapping. I've shown you guys the VIX EQ relative to the VIX. This is the problem, is that single name stuff, partly because of AI and the demand shift that's happening, but partly because of the massive option flow. I think you're going to see something next year that's on the back of this. So I would go listen to their conversation. I think it's worthwhile. Scott Rubner put this out this week, and this is where I want to just show you. This has been a trend that has been in place for quite some time in terms of the retail option volumes. They're continuing to set new weekly records. This is a gambling community. I remember going.
We're trying to get out of it.
Baby boomers, buying every dip.
Trying to get it out of the struggle. We got to gamble to get out.
Really started, which was in the 1990s after the internet side. And again, fast forward, this generation different than the baby boomer generation. But if you're in your 20s and 30s and you're trying to make extra money, and this is the way you do it, gambling on whatever you want to gamble on, why not gamble on this? The odds are better in your favor than they are in gambling on sports or things where there's actually efficiency. The stock market goes up 80+% of the time. and hedge funds are forced to run market neutral, and mutual funds are forced on the active manager side to be benchmarked to an index. It's very, very difficult when you get to this point that you have two forces, passive investing and now retail, as the other part. So when you take the barbell and you realize how much smaller the active managers have gotten, and more importantly, how much more market neutral and factor neutral you've gotten, leverage has gone higher, and I think we're going to see a GameStop type situation, which will have huge implications. Zero, DTE option, data expiration option.
Don't do those. I like months out. A little safer.
S&P now.
I try to cover options.
This has been a major thing as well.
That go further out. Zero DTE,
and to give you an idea,
days to expiration, very risky.
Here is the GameStop quarter. Here's where we are now. Look at the blue. The blue is the zero DTE options.
Don't do it months out.
Of flow of the volumes. So look how much you've had barely any change in longer dated options. You really haven't had much change
retail.
In the 1 to 5.
It's gambling.
You've had change in
blue
everything that is short term in nature. That leads to potential of massive squeeze in terms of gamma. So as someone who traded options throughout his career at Morgan Stanley and managed the S&P book for the firm in 99 to 2002, I can tell you that having this much zero-day contracts become a dominant force, this is a big deal. And I don't think we've seen the disruption yet that will come. I think it's going to happen because I think the market's been warning you. I think it takes a catalyst to break the concentration. So the concentration has been about a very few amount of names that are participating. If I'm right about the PMIs, and I'm right about the fact that more and more companies are going to benefit from the build out of the hardware and the material side, and we get energy to start going higher, these things are all priced at massive discounts, particularly the Russell 2000 relative to the S&P. So whenever I talk to people about small caps, they go, well, yeah, this has been a trend. I really don't care. I'm not talking about them winning in the long run. I'm talking about a period of time where this all becomes about squeezes and gambling and positioning, where quants
that's how you can make a good amount of money. Got to be in and out though.
Side. So just keep this in mind when you see this chart, which is the gross leverage chart for the long-short community. This was put out by Goldman Sachs.
And by in and out, I mean, if you want to be long for the long term, if you want a diamond hand, good to at least have a portion of that to be able to trim, take some profits if there is a volatile, unsustained move to the upside, like, we saw over here, like we saw over here. And that can last multiple weeks. It could last a year. So, but just good to, have a plan for that, because you don't want to just hold it all the way up and then hold it all the way back down. It's kind of like meme coins. If you hold them through a bear market, goes up a lot during the bull market, and then you hold it through the bear market, it goes down to zero. Very painful, waste of time, opportunity cost. We don't want that. We want to make money.
This week, we're at all-time highs at 220. So this has been going on. So they don't have a GameStop situation here, which brought the leverage down. Then we went higher. But you know what this looks like from early 22 on, as the leverage has just gone higher? It looks like this. And this is the Goldman Sachs crowded longs versus crowded shorts. It peaked in June, and it started to go down. It went down because the quote-unquote junk was rallying. I think there's a lot more junk to come to rally. So if you guys are
it's not
in this
over.
Stuff,
there will be a
reach
REQUEL.
Out to 22V. I'm happy to spend time. I think this has the potential to be something here. This was the GameStop month. So that's what that index did during that month. It was a 30+% fall that was even weaker at some points during it. And remember, this was all about a few names. I think this is going to happen in a much bigger
some of those
scale.
names.
So here we are, 4 of the last 5 months. But in particular, it's been a while that this unwind has been happening. And this is all, in my opinion, because of AI and what it's doing to the market. It is allowing companies that have...
And also, not necessarily related to AI. I'm not sure if it is. But just thinking about AI in relation to the internet economy. GameStop's really tapped into that with the power packs and with their, online business shutting down a lot of their retail businesses in other countries, like I believe Germany. I'm not sure of the other ones. But focusing on this like internet economy, and that's going to relate to AI, to crypto in a lot of ways, and just like trading those cards online, the power packs, that is effectively like they're like NFTs, non-fungible tokens, which is crypto. So I think that like GameStop's really leaned into that in a very good way. And also, Ryan Cohen was waiting to add more Bitcoin to the balance sheet for an opportunity. I believe they do have earnings coming up. It will be interesting to find out if GameStop has added more GameStop to their balance sheet when it dipped down to, the low $80,000 price. So that seemed like it was a really good dip. Maybe we do retest those lows again before things really start to go up. I think that'd be an opportunity to add more, whether that's for GameStop and their balance sheet or, us, the retail traders. I think that if there are dips, again, if there is another dip, I think that would be an opportunity to add, whether that's Bitcoin, whether that's GameStop, or whatever it is, the speculative stock that your most favorite. There could be some nice opportunities for these to go up very volatile in a very volatile manner in the new year.
Had no business, and I'm going to go through some of them, or at least one of them today, where they're now going to have AI agents and their profitability will change overnight. And the second that they start to squeeze higher,
more efficient, fewer board members, more AI.
Momentum need to buy. You'll have retail all over them. That's what they jump into. They're into momentum, and quants turn into momentum as well. It will force hedge funds.
Don't mean to interrupt you, Jordy, but I just want to say, down here, this is where we want to be adding. Even still with it closing at 22.53, this is where we want to be adding when it's below Roaring Kitty's average of 23.41, I believe. When it's below 25, that's when it's good to be adding. We don't want to be chasing momentum. That is dumb money. Have we learned the past few years, the past 4 years? Yeah. 4.5 years or so. Have we learned? Accumulate when down, trim when up, or just hang on for the ride. So yeah, let's not chase momentum. Let's ride the momentum.
As well. So for positions, and again, this is IWM over SPY.
That's the move.
Is all leading into the GameStop situation. That is the peak of the GameStop situation. You get a move like that in IWM versus S&P, same thing. You're going to knock a lot of funds out of business. I would be very wary again of being short small caps, and I would start to pay attention to what retail is doing and what the quant strategies have been doing with fundamentally garbage companies that are all of a sudden seeing a benefit. PMIs have been below 50 for the exact same amount of time that trade has worked.
Okay, so I don't want to make this go too long. I hope that you guys found that useful. I hope that you found it informative, the way that I react to these. If you did, please make sure you like the video, subscribe for more content like this. And, I hope you have a great weekend, great holiday weekend. I hope you had a nice Thanksgiving, Black Friday. I hope you got to get out to GameStop. I took advantage of some deals there. Anyways, with that being said, thank you so much, and I'll see you in the next one. Bye, guys.